Good morning, good morning, good morning. I hope everyone is doing well. And yes, we are back. This is episode one. We disappeared for a little bit, but we still were doing some things behind the scenes for a private group of individuals and just kind of, keep going. But we wanted to really decide on how we want to do this YouTube, how do we want to help out individuals. So we decided we want to focus on clarity. Right now on the internet, the stock market, all that stuff, it's so much information, it's just not clear. You got somebody saying do this, you got somebody saying do that. We're not telling you to do anything. All we're trying to do is help you see clarity through the charts, identify particular levels, make sure you understand your confirmation that you're looking for, meaning when you get to a particular level, something's going to happen. It's either going to go up, it's going to go down, but we're just trying to clean it up for you. Okay, guys? So we would love to be your second eyes. We would love to be something you could bounce off of. You still keep your strategy, do what you do, but we would love to be a supplement to what you do. All right. We do have a Discord. We're going to start posting that Discord throughout the week. But this particular presentation is a little bit longer than what you'll get during the week. But on the weekends, I want to break everything down. This is episode one. We're back. Share it with your friends, share it with anybody. And please go ahead and subscribe. Please go ahead and lock us in. We got some good content. Join the Discord. You see the full reports written. Give me a little bit more detail, a little bit more levels. If you go through this, you don't have to really take notes. Just listen to what I'm saying. All right. Well, my name is JB. My partner's name is Josh, and we're gonna ready to rock and roll this episode one. I hope you guys enjoy, and let's go. So first thing we do is we talk through the charts. I don't believe in graphics and all that stuff. I'm gonna talk to you through the charts. It's almost like a rapper talking to you on wax. I'm gonna talk to you through the charts. If I don't see it on the charts, I ain't gonna even talk about it. If I see it on the charts, it means makes more sense. But let's go ahead and share. Let's go ahead and share exactly what we see and what's going on right now to kind of it's some concerned things going on. Okay, guys. All right, so check it out. This is the spy. So we have a couple of levels, and you'll get really used to my color schemes and all that stuff. You'll get used to it. So right now, this is what I definitely do notice. So if you look right here, hold on, let me shrink it up. This blue line was a line that told us on the weekly, that's a level on the weekly, that if we close below that particular level, we're going to have some particular issues. On early in the week, we got down below it, but we didn't close below it, right? So early in the week, we closed at 680. This level is 676. Then I told you guys, hey, this is a level where the stock market has to bounce. If it doesn't fight this particular level, then we have some real problems. And these were critical levels. So you have a red line right here, and I'll show you what that red line is. So I have a weekly reversal down, and I have a monthly reversal down almost at the same location. So the explanation I said is right here, the market has to fight. If it does not fight and we bounce up and then come right back down, all we did was try to kick the door down, and the person had to back up, get a little further back, and then run at the door one more time. If we finish the week below here instead of getting away from this level and continue to go up, be careful. So this is why I have these particular levels. I'm gonna show you to you right now, and hopefully you see it. Hopefully it makes sense. Check it out. This candle right here is in December. This is a big candle, right? We are trying this red candle was something that we want to resist. Now we did not get below it as of yet, but we're messing with it, right? We get below this level, there's nothing stopping us from getting all the way down here. That's another 3%, 3% on the stock market within a short time period. That could be a little critical. That could be a little scary. But the problem that's got me scared is the fact that I use the 20 moving average as my barometers for everything that I do, right? So when we look at the barometers of the 20 moving average, obviously, as you see, we're below the 20 moving average on the daily. Let's go to the weekly. We are currently below the 20 moving average on the weekly. Let me shrink this up a little bit more. I use TC2000. I like it. It does everything I need to do. We're below that. And there was a trend line that I had here that we actually broke as well. So right now, the market is acting like it's ready to go down. The market is acting like it's ready to go down. Now, remember, I do not tell you what to do. I'm just telling you what the stocks are telling us to do. Now, the cool thing about it is right now we have this has kind of created a doji right at a critical level. This is the monthly level that we did not want to get below. We closed below the monthly, but we did not close below the red line, which coincides with that big red candle that I showed you earlier. Now, on Monday, what you want to be watching is, as you see, this bottom gave us a double bottom. This double bottom right here is exactly 669.76. If we start breaking 669, 670, we got a double bottom, and then that puts us below this red line. Guys, be careful. Now, the only thing that might save you if you're nervous about the market completely rolling over is the fact that we are oversold on the daily, which is Bollinger Band. Now, oversold does not mean we're going to bounce. It just tells you statistically this is an anomaly and stuff is starting to break down at certain locations. Now, sometimes you get to that level, just like right here, you get to that level and then you bounce. And then sometimes you just slide. Now, if I was you, what I've done for me and people I work with, hey, get some protection. You don't have to get out of stocks. Just kind of get some protection, see what's going on because statistically, not statistically, not technically, we're in a critical area and we getting some closes below some major areas. Now, the last line of sand is going to be this big red line from that big red candle. That's the last line. Now, what they might do, they might gap it below, and then you don't have an opportunity at all. That's reality. You might gap it, come back up, test, and but now we can go all the way up. Now intraday, this is the only thing I do intraday would be the SPY, the Qs, IWM, and Dow Jones. So in our reports, we have a majors report. We have Q, SPY, IWM, and the Dow Jones. Those are your four. That's one of your reports you'll get. And today we're going to go through all three of the reports, and then I'll break it down what your report would see when you come to the Discord. I hope you guys enjoy it. We do a really good job. We break it down. Everybody in there is making money, but more importantly, everybody in there has clarity on what they should be looking for. That's all I'm trying to focus on is clarifying exactly what you should be looking for and explaining why. So it's not just telling you what to do or not telling you what to do or telling you what's going on, but why it's going on and how is it supported. So we believe in using multiple indexes to kind of give us confluence or give us contradictions, whatever. But we want to use multiple indexes. If everything is starting to do the same thing, then the probabilities of it continually happening strengthens up. Okay. So this is concerning. This means okay, get ready for protection, but you do have some support here at this red line, but we might gap below it and just go. Now, if intraday we start to get below this line and this line, the wicks, which puts us below the red, be cautious, be careful. We start breaking down below 670. You need to really be careful. 669.76 to be exact. All right, so that's the SPY, okay? We want to recover all the way back up above the 20 moving average on the SPY. But as you see right here, for quite some time, I'm gonna try to keep each of these stocks shorter because I don't want this to be. It's going to be a little longer today. But as you see, we was in consolidation mode, right? We was going up and down for quite some time. Then we broke it, we snapped back on it, and then now we're breaking down. We're breaking down below the lowest point. Boom. I just need you to see that. And this is the date. The date of this particular candle is December 17th, 2025. That's a very important candle because after that, we can go sliding, and then you have this huge drop down candle that we might rock and roll with. Now, you got to understand what happens is the individuals that's been buying, once we break this candle, that's on everybody's chart. Once we break that candle, then those that try to buy at that candle, they're going to turn around and sell at that candle because they're like, oh man, we're below the level I got in, and I see some strength going down. Let me go ahead and get out. So then they'll start to add to those individuals that are trying to push the market back down as well. Let's go to the Qs. Let's go to the Qs. Keep it short, sweet. Hope you guys enjoy. All right, so this is what the Q. Now the Qs are a little different. If you look at this particular chart right here, we've been in a consolidation mode between this top candle and this top candle. Now, as of right now, even though the Qs are below the 20, which is a bearish standpoint, and they're below the 20 on the weekly, let's show the weekly. They're below the 20 on both of them, right? There is a previous all-time high, then there's a retest of that all-time high, and then it bounced up, right? That's what this purple line is for. But in regards to the Qs has actually been trending down for quite some time. The Qs have been trending down. It broke some levels, but as of right now, you're looking at above here, below here. This is kind of these particular areas. Now we want to drop down and get through there. Now remember this candle right here. There goes the candle that we talked about earlier, but here goes that red candle from what did we say? December 17th. We've already broken that particular candle on the Qs. The same candle that the SPY we're looking at, we already broke it on the Qs, and we're starting to work our way all the way down to this huge drop down candle, which puts us right back at a previous all-time high, which that's exactly where it bounced off of and took off for quite some time. So pay attention. Right now, the trend is down. The trend is your friend. I'm not going to repeat certain things that you hear all over the internet. I want to give you a fresh, brand new look at some things. So we're just trying to give you clarity. There's a possibility we come here and bounce off, just like there's a possibility on the SPY, we get to that red level, then we bounce up. But you need to know these are the levels you need to be watching for. All right. Um, IWM. Here we go. Now, IWM. Whew, now, as you guys know, small caps are the major canary in the coal mine, meaning they really tell you something, right? So as of right now, we are below the 20 moving average on the daily, which means short term we're bearish, and then we're below, I think we're below. Now we are officially, we have just broken the 20 moving average on the weekly. So guys, as a swing trader, whoever you are, this is critical. This is very critical. We are below both levels, both long term and short term is in a bullish standpoint. And it literally gave us the same exact situation right off of this green level, which is a monthly level. That's very, 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 very important. Okay. So in regards to IWM, and hold on, I'm sorry. There's also another level right here. This is the weekly. So we close below the weekly. We close below the weekly reversal down, which is right up in here. And we're sitting right on the monthly reversal down. This is critical. So what I would do is I would put, if we get back down through here and we break the bottom of that candle, which should match up with the SPY's bottom, you got to be a little nervous. You just got to be a little nervous. These are levels you need to watch. However you protect yourself, however whatever you do, whatever your confirmations are to do that as a person. I'm not talking about protect. I'm not even talking about from protect from just a little short term move. I'm talking about this is starting to get to critical areas. So pay attention. And I'm not giving you advice. Please, this is not financial advice. I'm not telling you to do anything. I'm just saying be cautious. These levels are alarming levels. Once we break them, you do what you need to do for your own portfolio. You might say, hey, good, it's time for me to buy more stuff. And that's fine. Some people might say, hey, I just want to protect what I got. That's up to you. But IWM has officially broken. Now it's below the Bollinger Band on the daily, meaning it's oversold on the daily. But that has nothing to do with anything. If we want to slide, we're gonna slide. On the weekly, we can come all the way down to this particular level that is absolutely a level. 228.90 would be the next major level that I'll be looking for. All right. Okay, now let's go to our last index. So the majors have four: SPY, Qs, IWM, and the Dow Jones. Now let's look at the Dow Jones. Boom. All right, guys. The Dow Jones officially has broken the monthly. It even broke what do you call it? Overbought territory is broken down that. So the Dow, now what's killing the Dow is really the financials, guys. The financials is killing it. Now, as you see, you don't see that big red candle that matches up with everybody else because during that time period, let's look for December 17th. December 17th, and you'll be surprised like how that's why each one has to stand on. See, that's the candle. That's December 17th. It really wasn't a down candle because at that time I think financials and JP Morgan was going well. What's been killing the Dow is the financials been getting destroyed. The financials have been getting absolutely bum rushed. Um, so we're oversold, overbought, oversold on the daily. Let's look at the weekly. We're below the 20 on the weekly. I mean, below the 20 on the daily. We now officially got below the 20 on the weekly. So the IWM is below the 20. The SPY is below the 20. The Qs are below the 20. And now the Dow Jones is below the 20 on the weekly. Right now, even on Monday, you might get a pop up, but please, this is not the buy the dip market. This is to sell the rip market. That's what it is. So pay attention now. We can come all the way down to this particular level. This is the same move that you saw on the other stocks. Matter of fact, I'm gonna put a line right here just for I'm sorry. See, you see that same candle? That's the drop down that we talk about, and it matches up with the Dow. That's the same area, right? So I'm gonna put a line there just to let me just to remind me that is right there. Hold on one second. I'm just doing this in real time. I apologize, guys. But hey, that's what we're doing. This is our first episode. We'll clean it up. We'll figure out some things to make it a little bit cleaner for you guys. But as you see, you got bounces here. You got here that kind of ripped up. Okay, so we do have this is an area that stands out. Now, this is a previous all-time high. So yeah, okay, all right. Matter of fact, I'm gonna hold on to this and I'm gonna do more evaluations if I want to use that particular area. All right, so this is our majors report. That's what our majors report would do. It'll break down every single day. It'll break down levels to look at for the intraday. This is the only thing that I do intraday is the indexes. Like your intraday, you're looking for a bounce all the way back up to about 477.75. And then once it gets up to 477.75, boom, I'm expecting it to then, if it wants to turn back down, that's where it's going to get momentum. Now, it could technically go all the way back up to the 20, but for the most part, right now, with a lot of stuff kind of breaking down, this is going to be a little tough. So get ready. Now, cool thing about it, if you know what you're doing and you know how you're doing it, you can make some money in this market. But at least we're here to give you a different look. Now, let's get to our next report. Now, our next report is called the Canaries Report, right? And in our Canaries Report, what canaries are there are stocks that kind of give you a clue on what's happening and gives you why something's happening. And sometimes it gives you a clue before it even happens. We have 10 of those. So our index report has four indexes that we look at: the SPY, the Qs, IWM, Dow Jones. Then our next report is we have 10 canaries that we look at every single day that we break down to kind of give you a synopsis of what's going on. That's how we knew the financials are getting blasted, because we do have a financial canary that kind of tells you. So let's break down emerging markets is our very first one. Emerging markets is just like small caps, but for international stocks. This is breaking down. Now, it is coming, cool part is coming to a particular level that is breaking down to, which is a previous all-time high. Sometimes you come all the way back to touch it and then bounce. Sometimes you don't. But it's broken down to below the 20 moving average on the daily. It's now sitting right on top of the 20 moving average on the weekly. So in a minute, if this starts to roll over and everything is rolling over at the exact same time, yeah, we got a problem. The index is showing weakness, but the international aren't. Now we have this huge gap right here, guys. A huge gap. I got to go ahead and put a line right there because, as you see, it completely dropped down. At one point, the stock market absolutely loved the international stocks, and then all of a sudden, when the war started, as you see, everything got just got obliterated. First it gave us a shooting star candle, and the rules on the shooting star at all-time highs is the rule is don't trade till you break the top of it or till you break the bottom of it. We broke the bottom of it, and then ever since then it's been dropping back down. You'll see that in the report. So we break all that stuff down. Now it's trying to hold, it's oversold on the daily, but the reality is I'm seeing a lot of volume. And anytime you see these blue tips, that tells you high volume. And out of five high volumes, three of them were down. Down, 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 up, and down. That means hold it, here goes another one, another down. These are high volume days as international small caps are getting pretty much obliterated. So pay attention. We are at a level it could pause, but mix it with everything else, we'll give you a story. But right now, it's sitting right on top of the 20 moving average on a weekly. If we get below that and we get below this, now we have some major problems. Okay, so pay attention. Okay, EFA is just like the S&P 500. This is the large cap of the international stocks. This is another canary. So we look at domestically, we look at the four indexes for our majors report, and then we also look overseas to see what the bigger companies are doing in those. We looked at small companies and we looked at the bigger companies to give us a story. Now, as you see, this is absolutely getting destroyed. You got high red candles. It's dropping. It's breaking areas. It broke areas. Let me see if on the weekly to get below the 20 on the weekly. Boom. Now, the international stocks are sitting right on the 20 on the weekly. You just saw small cap and you just saw large cap. They both sitting at the same exact location. And this one had two high volume candles regarding drop down. All right. So what I'm going to do right here, this is going to be a level that means something. It's going to be the low of the candle. The low of that particular candle, we break the low of that particular candle, then that means that it's free falling and it has a location all the way down. As you see, let me move this out the way. I'm just doing this in real time. As you move it, as you see, all the way down here to 91.39. It's at 98 right now. That's $7 on a $100 stock. That's another 7%, y'all. That's almost 7%, a little less than 7%, but that's a whole, in some situations, the stock market traditionally averages what, 8% on average? So you talking, and this is moving quickly. This is a daily candle. It went from 105 to 98. It dropped $8 on a 105 stock, which is less than seven. It did that literally in 2 days. It lost 7% in 2 days. And then as you see, it took a long time to gain that seven. I know you guys heard this before. The stock market takes the steps up, but it takes the elevator down. When it's time to drop, they drop the stock market so fast, but you got to be paying attention to when you get those confirmations. And that's what we do. Come to us every single day to get your feel and get another view from the technical standpoint of if it makes sense for what you see on your chart. All right. So, there's a line right here. I'm trying to see if it holds it. But right now, international stocks are sitting on the weekly 20. They have to turn around. If they don't and they get below that 20 on the weekly and everybody else gets below their areas and we already got some stuff getting below the monthly 20, we have a major problem, okay? All right, next one is gold. Now, gold tells you pretty much the fear in the market. So gold's been kind of choppy. It's been kind of doing this thing. It ripped for a very long time. Then it kind of paused for a little bit, and then boom, as soon as the war hit, now it's starting to climb back up. I'm looking for gold to get above 474.26. Once it gets above that particular level, then it should be breaking all the way back out, guys. Then it'll be heading back to all-time highs. But gold right now is trending up, which tells us that there is fear in the stock market. And there was fear in the stock market before. Now, here we go. So IBT, this is Bitcoin. So Bitcoin tried to kind of move, tried to kind of break, but the problem is Bitcoin is kind of broken right now. And I think Bitcoin is a real issue with the market. The more Bitcoin drops down, the more it starts to drop down. People are going to get margin calls and people are going to have to sell other stocks to either hold on to Bitcoin or if they don't want to add money to Bitcoin, they're just going to sell their Bitcoin and take whatever profits they have. So right now it was choppy sideways like it was trying to recover. Then it kind of broke out. Now it's sitting right back on the 20 on the daily. Now, the overall trend on Bitcoin is bad. The overall trend, we're way down here. The overall trend on Bitcoin is absolutely horrendous. And this is the high volume candle. The reality is you got to break above this candle or break below this candle since it's being high volume. That would tell you really where it's trying to go. But as of right now, it went sideways. Bitcoin is struggling. It's a hard trade. It's a hard asset to trade right now. Because it might give you pop-up days, it might give you drop-down days, but right now the overall trend is down. But pay attention to it because it's a reason why other stocks might be affected because of Bitcoin. And stocks like Tesla owns a whole lot of Bitcoin. And if Bitcoin continues to drop, people are going to attack Tesla because the Tesla is attached to Bitcoin by a lot. And if you look up Bitcoin's at 40,000, watch and see what Tesla's going to be at the same time. All right. Now, IYT. Now, IYT, high volume, major drop down, below levels. It just blew through everything. These are the transports. Transports tells you what the economy is doing, y'all. That's what it tells you. Transports tell you what the economy is doing. So right here, we have a particular level right here of the transports did break. Hold up. Let me change this up. I'm sorry. So the transports did break this particular weekly reversal. Now this isn't, I'm not putting this down to anything. I'm gonna take this away. It did break the weekly reversal. It's gone down. It broke even the support level, right? So right now, transports on the daily is way oversold and it's on high volume. When you start seeing transports, that means economy. That's not just stock market. That's economy. When you got the market struggling, you got the financial struggling, and you got the transports, which is trains, planes, trucks, ships. That's the movement of goods and services, and you see that it's starting to roll over in a very hard way. And I'm just talking to you technical. Now, you might listen to people that tell you why all this stuff is happening. Cool. I'm just telling you from a technical standpoint, they might be right if it's matching. Now, the cool part about it is, once again, we're sitting right here on the 20 moving average on the weekly. So the fact that we're sitting right here on the 20 moving average on the weekly, right here, that means that this might be a level that it has to hold. But if it doesn't hold, be cautious. And then I have a monthly level right here at 74.39. If we start to break down below that, we have a major, major, major issue. Okay. But this particular candle is a very high volume candle on the weekly. We had major drop downs, and this last candle was vicious. So I'm going to be watching this closely. So I'm going to put a line at the low because this puts you, I think this puts you under the 20 moving average on the weekly. But pay attention. The transports are struggling. The transports rolled over as soon as the war happened. Transports just completely died. They just died. So you got to start looking at your deltas. You got to start looking at your all of that. Because think about it. If we're at war, does anybody want to travel? Is there going to be international travel? So Delta, American Airlines, all of those companies, United, those international travel airline sites, Be cautious, be careful, because for some reason the transports are struggling across the board. All right. Now, RSP. Now, what RSP is, this is the stock market. So traditionally, the stock market is weighed according to how big your company is. That means Apple moving up and down is going to weigh way more than Carvana moving up and down because Apple's a bigger company. So the bigger the company, it impacts the market more. But what RSP does that's very unique, it gives everybody equal weight. So that means if Apple goes down 3% and Carvana goes up 3%, the market moves 0% because it doesn't matter how big your company is. As long as you're in the S&P, we give everybody equal weight. So what that helps me understand is when we look at the canaries in the coal mine, it helps us understand that is this a broader drop down or pop up, or is this one company dropping down or popping up? I've seen many times where RSP was dropping down while the S&P was going up because maybe Apple had earnings, but everything other than Apple was dropping. That's something that we need to know. So let's see if this move down is also supported by all the companies, not just the big ones. And according to this, absolutely. We closed below the weekly reversal. We closed below major levels. We closed below this was an engulfing bar that we never got below until just this Friday. So we finally closed below this engulfing bar. So I'm gonna take that off. Um, and now we all the way down here at a week, now that was a daily engulfing bar. This is a weekly one, right? This was a weekly, hold up. So that was the one right here. That was the one right here. This particular candle, matter of fact, now we have another engulfing bar. We have the top of this bar and the bottom of this. Engulfing bars tells you same thing as a shooting star or a hammer candle. You break the top of it, you break the bottom of it, that tells you something. Now, this was a previous all-time high. We get down to that, but the reality is we have this 20 moving average on the weekly that's coming up that is going to probably have to make a decision at that particular point, okay? And then we have the monthly reversal level where we get below that. Now we have some issues across the board. So now we have a new engulfing bar, but it's a bigger engulfing bar because it's a weekly engulfing bar. Higher time frames mean way more have way more power than lower time frames. So check this out. Here we go. Now we got to get back above all of these levels. We're below the 20 on the daily, which means short term is very bearish. We have this real crazy candle on the daily. Now this gave us a beautiful hammer candle here, so that can mean something. It might be trying to reverse back up. But we're at those levels that mean a lot, as you see across the SPY, across the Qs, across everywhere. We're at levels that are very important for us to defend across the board. So there's going to be some activity and some action. But as you see, stuff just started dropping. War broke out, and then all of a sudden, the market just rolled over dramatically. All right, let's get to the next one. I know it's a little long. I only do this on the weekends, so please just subscribe. Our videos won't be this long, but hopefully I'm breaking some things down to you, showing it to you, and not only educating you, but make you feel a little bit more confident in what you're trying to do for the next week. Okay, SMH. This is the semiconductors, which is pretty much the Qs, the big companies, the Nvidias and stuff like that. We're actually getting back to a level that's previous all-time high. We haven't broke the weekly reversal down because it's been choppy for quite some time. If you look on the weekly chart, I'm gonna show it to you. We've had major candles and we've been going up and down, up and down, up and down, up and down. But as you see, the 20 moving average is right at that level where the previous all-time high is and where our weekly reversal down is. If we break that and everything else has already been broken, and then we break the monthly, this green one is the monthly reversal down. Okay, then we're gonna have some major problems. But this is another cool thing. Not only do we get here, that doesn't mean that we short it. This might be an area where you get your bounce. If you're a swing trader, these might be beautiful areas for you to actually get in and take it back up. Now, wait for your confirmation. I don't believe in catching falling knives, but these are areas that if you're a swing trader and you're trying to get into some more locations to go back up, once you get your confirmation, you feel comfortable with that you was able to take that market down to those areas, and now you got confirmation that it's going back up. This is where you make your money. This is where you make your money. So this is where we are. We in these areas. This is where we're close to. We're looking at 367, which is a critical area. We're looking at let me go to the daily. We're looking at 370, 396 was the critical area, and then the 20 moving average on the weekly is a critical area. So if you're a swing trade, if you're bullish, get ready because we should have some type of bounce pretty soon. If you bearish, get ready. We might have a drop down pretty soon. Now, wait for your confirmation. Do what you do. That's not for me to tell you. But what I am telling you is be prepared. It's time to make some money this particular week. Either you're bull or bear. You're going to be making some money this week. Here we go. All right, getting near the end. Now, TLT. TLT at one point actually broke up and started looking strong. TLT is the bond market. When TLT drops, that means interest rates are going up. When TLT rises, that means interest rates are going down. At one point, interest rates were going down. Now, all of a sudden, when the war hit, all of a sudden, everything started going the other way, and interest rates on homes and interest rates on everything is starting to increase. Now, I'm not even gonna lie to you guys. This looks very eerie. We'll get to. Oh, we saw gold is rising. You're looking at interest rates rising. Gold is rising. Only thing left is to look at energy. And I'm gonna be honest with you on what this feels like, and I'm not even gonna front. Okay, so we broke the weekly reversal down. We're heading down. Let's see what we got. We're below the 20 on the daily. It was choppy at one point. Now we broke back down again. Yeah. So right now, TLT is struggling. If you're in the bond market, TLT is struggling. Interest rates are rising. But that can all change if things get real bad. But as you see, we have levels now. This doesn't really rally too much. TLT kind of stays in its pocket. But right now, it is back below, and it had high volume down. That's the part that's disheartening. The volume was so hard going down that it's probably going to continue to head back down again. So. Yeah, I'm gonna turn this into more so a support level instead of a reversal level. It was an old one. All right, so just pay attention to it, the bond market, and I'm gonna break. Let me talk about it right now because I already know oil. Oil's starting to rise, obviously, because they're at war with Iran, and then they went to Venezuela. Whether right or wrong, I'm not sitting here to tell you. I'm not a political person. I'm just telling you what's going on. Gold is rising. Financials are getting obliterated. They are dropping hard. That environment where financials are getting obliterated, gold is going up, and oil is skyrocketing, it's starting to move back up dramatically. It doesn't resemble 2020. It resembles 2007. And interest rates are high. Now, what they're going to probably have to do is eventually interest rates going to get cut or chopped if our economy gets to a struggling point. But the problem is the thing that we didn't have in 2007 that makes me a little nervous. We didn't really have inflation, like major inflation at that time. So when you have inflation, and I'm just talking about it right now, when you have high inflation, to suppress inflation, you have to keep interest rates high to take money out of the system. But the problem is, if you drop interest rates to protect the economy and you have inflation currently happening where right now you're going to see your gas prices go up, especially auto gas, it's going to shoot up in a very short time period because of what's going on overseas. And if oil shoots up, food is going to shoot up. Travel is going to shoot up. That's why you see the transportation stocks struggling because it's going to start cutting into their margins when they have to transport something, and now the cost of fuel and all that stuff is just skyrocketed. It's going to hit their bottom line. So when you talk about all of that together, banks are crashing, inflation is going up, interest rates are rising, gold and commodities are starting to go back up again. Oil, it's just a weird environment, and I don't know how to combat it. So this is just us having a conversation. This is just us talking, just to give you clarity on what's going on and just give you a little bit of sense of what's going on. All right. So we're talking strictly from the charts, and I'm giving you a little bit of fundamentals from it as well, but we're talking strictly from the charts. Right now, TLT is still in the chop zone, kind of for the most part overall, but it did break down below particular areas and it's dropping back down, which means interest rates are rising and the volume is coming in pretty good for it to drop back down. That's as simple as that, guys. All right, let me get to the next one. XLE. Then now this is energy, straight up energy. Energy stocks are gone. They rocking and rolling. They dang near at all time highs. As you see, they moving because oil's moving. That's what it is. They're going, 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 and they're rocking and rolling. The Chevrons, the Exxons, all of those particular stocks. Now, eventually, stocks can act opposite of actual oil because you are still part of the stock market and you are still a company. Now, if you want to invest, oil might be skyrocketing while energy stocks might start to struggle because the market is just completely weak. And I got a margin call on Bitcoin. Hell, I'm gonna still sell my Exxon shares because I got to get this margin call on Bitcoin. Now, if you are in oil, you just ride the oil wave. Forget the companies, you just riding oil up, which is USO stuff like that. But yeah, so XLE skyrocket is moving. They're going up. So oil energy companies are going up. Look at the financials, guys. The financials are getting, oh man, they're just getting obliterated. They've been getting obliterated for quite some time. Let me show you on the weekly. We are below that. We're breaking down below that. We start getting below these particular areas right here. We did kind of, I'm gonna put a line at the bottom of this because if you look to your left, and sometimes you get answers to your left, you have this candle, you have that candle, you have that candle. Now you have this particular candle, which gave you a doji. I'm gonna take that candle off of here. It gave you a doji at that particular area. This doji is letting you know that the bears and the bulls are trying to fight right here, right? So if we break below that, look what you got over here. You have a whole nother high volume candle that you'll be also entering into, and the next level will be all the way down here at around 41, 40, I mean 42, 42, 21. That will be a level that you absolutely need to pay attention to, okay? So I'm about to put this right here. Give me 1 second while I do this because I'm looking at it in real time. And then I'm going to put a red candle right here at the lows of this because if I look to the left, there's a weekly chart. So with this being a weekly chart, these are weekly support levels that you can obviously see. It went up, it got a little choppy. Now it's starting to roll over and it's breaking down below everything, right? It's below the weekly 20, it's below the daily 20. And these are the financials. If we start breaking down through here some more, they can drop and they can drop fairly hard. Now, I did give you a beautiful hammer candle right here, but we'll see what happens. We'll see what happens. And at that location, I probably look, you know what? I'm gonna put it right here. I'm probably gonna see if that hammer candle gets broken, especially when it hits a location and you get confirmation back up. I'm looking at that, but I really want to get back above 51.26. But just for my purposes, I'm putting a line right here because that's the top of the hammer candle right at a particular level. I only look at candles that do something at levels. I don't look at candles that are in dead air. Like a doji in dead air right here don't mean anything to. But if you give me a doji right at like this doji, you give me a doji at the 20 moving average, then it means something. So that means I'll put a line here, line at the bottom. When we break it, we should drop, which this is exactly what it did. Dojis in the middle of nothing don't mean nothing. A hammer candle right here does mean something. A doji right here, that doesn't mean anything. It's this hammer candle means way more than this doji because it's in dead air. All right. So I hope I educate you. Now, we did the majors report. We just completed the Canaries report. Now we have 20 stocks that we look at that kind of tells you what the market is doing and why the market is doing it. If you don't know what Apple's doing, if you don't know what Google's doing, JP Morgan is doing, Exxon, if you don't know what these stocks and what these companies are doing, it's very difficult for you to understand what the overall market trend is. Now, I know today's video is a little longer than usual, but bear with me. It's going to be, they shorten up throughout the week. And what I'm doing right now, you get a full report on it every single day. But this is the weekend. I just want to break some stuff down to you. All right. All right. So let's go to our 20 stocks. We're going to rip through them pretty quickly, tell you what's going on, see how we see. All right. This is the core report. The core report tells you exactly why something's going on and what is going on, what to look for. Okay. All right. So let's go quickly. Apple, it has broken a particular, hold on. Let me go to the weekly. It's below the 20 on the weekly. It's below the 20 on the weekly, below the 20 on the daily. You see this particular shooting star candle. It gave you a shooting star candle at the 20 moving average. We didn't go above it. We did break below it. Boom. The fact that we broke below it, that's an issue, but we do have a location that we want to watch out for. This is the weekly reversal down. If we break below this particular area right there, then now it's going to start getting down to the monthly cook. So it is what it is. So right now, Apple is absolutely bearish. Apple is bearish on the daily. Apple is bearish on the weekly. That's just what it is. And you have this huge elephant candle right here, and that puts us below that candle as well. We get below that candle, we start cooking, we start getting below these particular levels right here. If we get below this particular level, please watch out, which is 243.42. We get down below 243, guys. Yeah, you got a problem. Now, this also could be your bounce. So keep in mind, I'm not telling you what to do. Just wait for your own confirmation. All right, let's keep it quick. We got to get through 20 of them real quick. All right, so now let's look at AMD. Let's go first. Let's start with the daily. Okay, on the daily, AMD broke down below levels. It's below the 20 moving average. It's sitting here right at this support level. The weekly drop down level, it hasn't gotten below the weekly of 183.55, but it's approaching it. Let's look at the weekly. We're below the 20 moving average on the weekly. So once we break down below this particular previous all-time high, we remember we gapped above it. We went choppy, and now we're working our way right back down to this location. This was a previous all-time high. Matter of fact, I'm gonna change that to a purple. And then it created a gap. If you look at it, now it's probably an earnings report, so it is what it is. Then it created a gap that might need to be closed. This gap needs to be closed. We break down through here, we start cooking. But right now it is bearish on the weekly, it's bearish on the daily. Both trends are telling you it's a bearish trend right now, okay? But you might be approaching locations where you might get a bounce. So swing traders, be aware, be patient, understand what's going on, okay? All right. Here we go. Amazon. Now, interesting thing about Amazon, Amazon actually closed above the weekly reversal on the way up on Thursday. Then on Monday, it kind of got weak. But so right now, Amazon is technically bullish. It got above the 20 moving average. Let's look at the weekly. It's still below on the weekly, but it's starting to work its way back up quietly and slowly. So Amazon is actually kind of strong and it hasn't broken back down back below any particular levels. But what I don't like is that Amazon did close below the monthly reversal down on the weekly. What week was it? What week did it close below that? It closed below it on this particular week right here. The 13th. So with it doing that, some of this move might just be head fakes, might be dead cat bounces, and then reverse back down again, close this gap, and keep going back down again. That's the reality of it. As a swing trader, you need to clear some levels before you feel real comfortable breaking. Now, we did technically clear that level that I would have said, it looks pretty strong, but we have all of these locations that have these huge gaps in it that those sellers that sold that might be turning back in again. All right, here we go. This is Broadcom. Broadcom is a big company. We have this huge particular rally from down here to up here. It kind of got a little choppy. Right now, we did get below the weekly reversal down. So any of these moves can be actually sold. As you see, it came, it went, and then it got sold right back off again. The move for anybody want to hold on to it might have to be above this particular level. But right now we're kind of in the middle area. But we on the daily, I would say that's consolidation. On the weekly, we are below that weekly, guys. We're below the weekly. Right now it's choppy, but we're below the weekly, a longer term trade. We're below that. Uh there's nothing right now that just has me feeling like, ooh, they got about to go. There's nothing, and it's sad that I can't find anything as of right now. Okay, Boeing. Remember, Boeing is part of transports. So now this is the interesting part. Transports got blasted while Boeing actually went up. If you look at Boeing now, Boeing went up dramatically. Boeing went up a lot. It went up a lot and it still did not clear any levels that would make me say it's time to get in. You're at the 20. The reality is Boeing probably goes up to the 20 and then if it wants to turn back around, it could. But it did fight this particular monthly reversal level. It's fighting that level and it's bouncing off of that level. Now, I don't know if it had earnings or any particular news. That's not what we're doing this for. We're just doing everything from a technical standpoint. But it's below the 20 on the daily. And it fought, okay, another thing, it fought the 20 on the weekly. They bought it when it touched the 20 on the weekly and they're trying to bring it back up. If Boeing breaks this to 34.75, that's a very good sign for Boeing to continue to head back up again, guys. But you don't want it to get back below that particular level or down below there. If you was a swing trader, these are your two levels. You're either gonna get it, wait for the break and go, or wait for the touch and drop back down. Get it, wait for this touch and bounce back up, or wait for the break and go back down. That's pretty much what it is, guys. Those are your two locations that you're looking for on Boeing. Boeing right now on the weekly is kind of choppy, but I'm gonna go ahead and call it bullish. On the daily, it is even though it's ripping, technically is actually bullish. I mean bearish. So this is a very interesting thing. All right. Now, Caterpillar. Whew, Caterpillar absolutely got, oh man, it got destroyed. So Caterpillar had a particular candle up here, a doji candle at the all-time highs. Let me shrink this down a little bit more for you guys so you can see it clean. Now, Caterpillar looked like it's trying to work its way all the way back to a previous all-time high and back to the 20 moving average on the weekly. That's what it looked like it's trying to get down to. It actually had high, did it have high volume on? The volume is starting to get in, get higher. It broke down below the weekly reversal, all of that stuff. These candles right here already have been completed. It broke down below those candles. That was a doji on the weekly. So right now, and it's over, it's oversold on the daily. Caterpillar is a transport stock as well. As you see, the transports are getting hit, and Caterpillar's getting hit. Maybe with interest rates rising and financial banks getting crushed, Caterpillar is a mover of earth. Caterpillar is, when it comes to construction, people buy Caterpillar for construction purposes. Does this mean that the market feels like construction or housing is going to struggle or anything, commercial real estate? If Caterpillar is struggling, banks are struggling, interest rates are rising, what is going on? And you still have inflation. You still have these homes that are still kind of creeping up in value. So, okay, just pay attention. Just pay attention. I'm trying to paint the picture for you. All right, next one. Costco. Okay, Costco bounced off of this and rallied. This was a level. This level is the 967.76. It literally came straight to that level and bounced up. All right. So on the daily, let's see the weekly. Still bullish on the weekly. Costco still bullish on the weekly. Costco still looks kind of strong. But you got to still understand the overall market. But I like the fact that it bounced and got away from that particular level. Right now, I would consider this more so chop season kind of consolidation. Want to see how it continues next week, but it looks pretty strong. It looks like it's trying to do something positive. And yeah, I think it just had earnings too. Let's see if those earnings hold. Let's go to Kyle. Let's go to the next one. Chevron. Once again, energy energy stock came to 20 on the weekly, bounced up, and now it's ripping and rolling all the way back up again. That's pretty much it's simple. That's simple. It gave you all-time highs. It broke the all-time highs. Now right here, it gave you a nice little hammer candle. So you break the top of that, it should continue to go. It's at the right locations, at an all-time high location. So that's a positive. Energy stocks look like they're doing well. But don't lean in too hard because if the whole entire stock market drops, the energy stocks can only go up so much, even if oil's going up. Okay, weekly. Okay, Google is below the 20 moving average on the stock market. Let's see where it closed. Let's see where it closed. There's a red candle from this particular candle here, and the stock is it was 297.45. It closed at 298.30. So it looks like it came all the way down here, tried to get here. It didn't close below it, but it's also looking at this particular monthly reversal down. So we have some issues going on. We're below on the 20 on the weekly, we're below the 20 on the daily. It is bearish on both ends, and it's sitting right on top of a major location and another monthly major location indicator. So, okay, guys, this is rough. What did it close? Let me make sure it closed at the right price. 298.30. So it really fought that area not to close there. So we'll see how it opens. It might open below here and drop. I would probably say the low of this particular candle might mean something. If we start getting through the lows of the low of that candle, which is 295, 295.25, then we start to hit our head back on that monthly reversal. Okay, we got to just be cautious. Okay, so Google, so the techs are still doing what they do. JPM, okay. Financials, here we go. This was a monthly reversal down. Financial, it closed at 289, and this is it's trying to fight it. This 285, this is the monthly reversal. It closed below a support level, which isn't good. It closed below a weekly reversal level, which isn't good. It closed below a weekly engulfing bar, which isn't good. So I'm gonna go ahead and cancel this one out. Yeah, I'm not, yeah. Okay, we go. So close below support area. It did pause at the monthly area, and there's also this area right here, which is the previous all-time high. Okay, financials are just struggling. Are just struggling. Okay. Moving forward, I think this particular report needs to just be on paper. I probably want to do this moving forward to go with the individual stocks. Okay, now we have a double bottom here. We have a double bottom on the daily. Eli Lilly is below the 20 on the daily, below the 20. Oh, we just broke the 20 on the weekly. Okay, this is healthcare. And we are below the weekly, we're below the weekly reversal down, and we got a double bottom sitting right on top of the monthly. This is a monthly of 967. Okay, guys, this is trying to fight it. Please pay attention. I'm gonna keep saying the same thing all over again. I think I'm gonna cut this one short just because these are more of the stocks that kind of tell the same story, but they also tell you from the hard large caps. I hope you guys enjoyed this. Let me show you what the rest of these stocks are. The rest of the stocks I look at. The rest of the 20 are these particular stocks right here. I'll go through the list for you, show you exactly what you get when you come into Discord. You got Eli Lilly, Meta, Microsoft, Netflix, Nvidia, Tesla, United Healthcare, Visa, Walmart, Exxon. Obviously, Exxon and Chevron are going to be up. But these are the stocks, these are companies that you look at. As you look right here, a lot of the stuff is red, meaning that they're below particular levels. There's only a few stuff that's actually up above particular levels. But just pay attention, guys. Wish you guys good luck. I hope to see you guys soon. Hope you guys subscribe, pass it to a friend if they need a little help, if they need a little bit more clarity. And you'll see another report tomorrow, but it'll be a lot shorter. And I hope you guys have a blessed day. Have a good one. Bye. I'm glad we're back too, guys. I'm glad we're back. Go ahead and subscribe. Bye.